NIO stock has fallen around 30% since March, with many investors panic selling following the Q4 earnings call. Some investors have sold out because they think NIO is broken, based on the poor financial performance. Right now, NIO is at a major crossroads, with 2025 being a critical year for the EV maker. In this video, I'll cover why NIO has been struggling so badly, break down the numbers, and share one key issue NIO needs to fix to turn things around in 2025. Founded in 2014, NIO is an up-and-coming player in the EV market in China. With just 160,000 sales in 2023, NIO is now China's fifth largest pure EV brand, with a 3% market share. For comparison, BYD company made 1.3 million sales in that time, giving it a 25% share, whilst Tesla sold over 600,000 vehicles for 11.7% market share. Now, one of NIO's company's more unique features is its battery swap business. This is part of NIO's broader battery as a service offering, where customers can buy the car without a battery and then pay a subscription fee for battery access, which includes battery swaps. And this sets it apart from many of its competitors and addresses one of many ongoing issues that face an EV owner on a daily basis, which is recharging times. And NIO has a wide network of battery swap stations where drivers can quickly exchange their depleted batteries for fully recharged ones. With this battery swap technologies, cars pull in and a robotic system swaps the battery whilst the driver sits in the vehicle. And this battery swap service has some great benefits. Firstly, swapping out the battery takes about 5 minutes, which is significantly faster than charging, which can take anywhere between 20 to 60 minutes. Secondly, users could upgrade their batteries as NIO develops them. The subscription service is for a 75 kilowatt hour or a 100 kilowatt hour battery. In the last 12 months, NIO has made available a new 150 kilowatt battery. Now, one downside to the battery subscription model is that it has required NIO to invest massive amounts of capital upfront to build the battery inventory, swap stations, and ongoing maintenance. However, as NIO sells more vehicles, it does hope that the utilization of these swap stations will increase, making the whole system more cost-effective. Last year was a record for NIO, as the company delivered over 220,000 vehicles. The company held a strong position in the pure EV market, with a 40% market share for the luxury EV segment, priced over 300,000 yuan. Its revenue was 9.1 billion, which was up 16% year over year. Its gross margin also improved from 5.5% to 9.9%, but remains below where it was just a few years ago, due to the pricing wars among the Chinese EV makers. And the company continues to lose money and posted negative earnings per share of $1.53 recently. So why has NIO stock been struggling so much? Over the past year, NIO has faced a mix of macroeconomic headwinds and industry-specific challenges that has weakened investor sentiment. The most significant factor is the ongoing ruthless price war in China's market, led by Tesla and BYD, which has compelled car makers to cut prices. As a premium brand, NIO's margins have been hit hard. Tesla's aggressive discounts have made it tough for NIO to hold on to its pricing advantage. NIO therefore responded by reducing promotional incentives to try and shore up its bottom line, which led to a brief dip in sales over the last few months. China's broader economic struggles has also played a role outside the EV market. Softer GDP growth, property market concerns, and weakening consumer confidence have created a challenging environment for large discretionary purchases, which include big-ticket items such as EVs. Meanwhile, NIO's continued investments in R&D, production capacity, and battery swapping infrastructure have increased its losses in recent quarters. However, we do know that these initiatives are crucial for NIO's future growth, but have led to heavily quarterly losses, prompting Wall Street to question the company's financial health. And this is a reasonable assessment, as future funding would be costly today, both debt-wise in terms of interest rates and equity-wise in terms of a low stock price. On the recent earnings call, William Li, CEO, made a bold statement. The CEO remains optimistic that the automaker will achieve profitability in the fourth quarter of 2025. He stated that the company plans to take aggressive cost-cutting measures and operational restructuring to reach this profitability target. I think this is unlikely based on the current situation, but not impossible. What do you think? Leave a comment down below if you think NIO can do it. During the company's earnings call on March 21st, William Li told investors that negative public sentiment has significantly impacted sales of the Onvo brand, with volumes coming in 30% to 40% lower than expected targets. And the company also faces pressure from geopolitical trade tensions. For example, the European Union approved tariffs on Chinese EVs last year. This came as the EU found that EV makers in China benefited from massive government subsidies, allowing them to undercut rival producers. Additionally, the US raised tariffs on Chinese EVs to 100% last year, under former President Joe Biden. And President Donald Trump has just announced a 100% tariff on Chinese-made EVs, locking it out of the US market. NIO is making progress and continues to grow its sales and top-line revenue. However, the company continues to struggle with operating losses and slower sales of its Onvo brand, and this could limit its growth this year. While the company is taking some necessary cost-cutting measures, it remains to be seen if these planned cuts will be enough to turn a profit in the fourth quarter of this year, as the CEO expects. That said, the stock right now is relatively cheap compared to the sales volume, and more aggressive investors interested in building up a position in NIO could build up a large position here. But it's important to understand that an investment in a stock like NIO is far from a sure thing, so beware of the risk and reduce your position size accordingly. So, talking about the stock price, is it cheap now and should you buy more? In the last 4 weeks, NIO share price has fallen heavily, and it's now down 45% since the peak of $5.49 in March. Now, last week shows price trying to find support at the $3 level with a clear reversal bar, suggesting the selling is slowing down and some buyers may be coming back in. The upside potential for NIO is high, but to confirm NIO is making a sustainable move, we need to see price first take out the $6 level and then the recent peak of $7.71. If the Q1 earnings are positive, this may be the catalyst to start this move to the upside. So what are analysts saying about the Q4 report? Analysts on Wall Street remain concerned about NIO's investment profile, with the stock carrying an overall hold rating based on 1 buy, 4 hold and 1 sell rating over the past 3 months. However, NIO's average price target of $5.25 per share indicates a good upside from the current position. NIO's growth story remains compelling despite its share price struggling over the last 12 months. The Chinese EV market is hyper-competitive, with all firms struggling for ongoing market share. However, when you look at NIO's increasing delivery numbers, 2025 could be a real turning point. China's economy is also poised for stabilization, and the global EV market is heating up. So NIO is well positioned to tap into opportunities both in the domestic market and abroad. The market may have discounted its shares due to the past and present issues. However, as clarity emerges, investors who can look beyond the near-term losses, among other issues, may find themselves well rewarded. So how will NIO move towards profitability in 2025? This year, NIO will add 2 new models to their EV lineup, the ET9 and Firefly, launching during March and April respectively. And these 2 new models could further boost sales revenue over the next quarter. The NIO ET9 is a battery-powered full-size sedan, and it's the first NIO vehicle to use the new Shenji autonomous driving chip, making it NIO's flagship vehicle. Deutsche Bank analysts expect monthly sales of the NIO ET9 to be 1,500 units, with CEO William Li saying, "The ET9 won't be a strong performer in terms of sales numbers, but if it sells 1,000 units a month, we'll be quite happy." Along with the ET9, NIO also launched the Firefly brand during NIO Day 2024, back in December. This is designed to challenge the BMW Mini and Mercedes-Benz Smart One, with an eye on the global market. In December 2024, pre-sales for Firefly began in China, with NIO calling the car a premium boutique small car. Firefly began pre-sales at a price of 148,000 yuan, and the brand will launch this month. So NIO needs a huge increase in sales in 2025. if it has any chance of turning a profit by the end of the year. It has just launched the ET9 and Firefly, so this is positive for NIO. What's also positive is that last month the Chinese government announced it will support the expansion of battery swap stations. Specifically, Shanghai will offer a 40% equipment investment subsidy, excluding batteries, for general purpose battery swap stations. Those stations that can support different brands and serve different models. The deal will start from April the 1st and run for 5 years. For swap stations that are not open to other brands, the subsidy will be reduced to 20% of the equipment amount, excluding batteries. Additionally, Shanghai will subsidize the amount of power used by the swap stations, capped at 600 yuan per kilowatt for general purpose stations and 300 yuan per kilowatt for non-general purpose stations. NIO currently has over 3,000 swap stations in China, with Shanghai having the most at 183, according to data compiled by CNEV Post. And according to NIO CEO William Li, the company's battery swap stations in Shanghai were already largely close to profitability. And in other positive news, NIO has recently received a financing proposal from CATL, which is considering investing up to 345 million in NIO Power, which is the power solution unit which swaps out the batteries in NIO's cars. CATL is the world's top battery maker and will partner up with NIO with the aim of building the largest and most advanced battery swapping network for passenger vehicles globally. The company's announced recently that the future models of Firefly will be compatible with the Choco Swap, CATL's own battery swapping ecosystem. So the government subsidy and the new CATL partnership are two things that NIO investors can be positive about. However, realistically, NIO needs to do a lot more to attract new investors back into the mix. Sales need a huge boost, and most importantly, the earnings reports over 2025 need to show investors that management is reducing losses that have ballooned over recent quarters. I believe that one key issue NIO needs to do in 2025 to boost investor confidence is to reduce losses. Management needs to balance the books and show the path to profitability will arrive in months rather than years. Yes, we know NIO is investing capital in future projects, but capital outlay needs to be balanced with growing sales numbers if the business is to be sustained long term. I'm sure we can all agree, NIO makes great electric cars, but the bottom line needs to improve for the NIO brand to achieve its full potential. I think 2025 will be a critical year for NIO. What do you think? Leave a comment below. Last week, NIO stock fell by around 7%, causing investors more hurt as this stock continues to underperform the broader market. So the question is, should you keep holding NIO stock if you're already invested, or perhaps should you buy more at this bargain price? So firstly, we can see that last week NIO did fall around 7%. On Monday, it opened at 367 and closed at 381. Tuesday, the price pushed higher before Wednesday, Thursday and Friday were bearish days, with Friday having a large sell-off in tune with the wider market downturn. And NIO did fall through this key 360 support level last week. And it looks as if now it's trying to find support around this $3.20 level. And looking at Monday's price action, it does appear that some buyers have come in at the 320 level to push price back up. And we do have a reversal bar suggesting there is some support here with some buying interest. So it'll be interesting to see what NIO does this week, whether it pushes up higher and tries to get back above this 360 level. And if we look at the bigger picture on the weekly chart, we can see NIO has been in a downtrend since the peak of around $66 back in January 21. So it is in a long-term downtrend. More recently, the price action has been sideways from this low in April 24. And for a short time, it did look as if it was trying to break out to the upside by breaking through this short-term trend line. But if you look closely, it found resistance at around $7.60, which is the bottom of the longer-term trend line. So clearly, there is resistance here at this 770 level, and price needs to get above here to really show that NIO has some momentum and buyers are coming back into this popular EV stock. So following the breakout of the trend line, It tried to push up, but the selling pressure was too strong, and price then fell away into the low in January 25 of around $4. And then, of course, after a small pickup here up to 541, price fell away following the negative earnings report and the wider market downturn last week. So NIO has now fallen through this key support level of around $3.60, where it found support back in April 24 and also August 24. However, last week it did fall through this key level and is now looking to try and find support around the $3.20 level. So Monday yesterday showed some buying interest with price reversing. But of course, it's just one day. We need to see what the entire week will do, whether the selling pressure will continue or if buyers are going to come back in and push the price back up. So right now the risk is towards the downside with NIO, and you may be wondering whether because price has dropped you should buy more stock, and that's up to you. At the moment it's high risk, and it does depend on your overall strategy. If you're looking to trade this stock short term, now's not the time to buy in. But of course, if you're accumulating this stock for the long term, maybe 3 to 5 years, then you could consider buying into NIO. But it is high risk. And based on the financial reports after the Q4 earnings report, it doesn't look good. So it may be best to wait until the financial health of the company improves. Now, if NIO fails to find support at this temporary level here of $3.20, where could it go to next? Well, based on the chart, it looks as if there is some support around this level here, around $2.30. And then if it falls through there, it might go down to the $2 mark. Beyond that would be the all-time low, which is around $1.20. And that was made back in September 19. So right now, the technicals indicate NIO is falling and is a high risk investment. It's always tempting to buy more stock when the price appears more attractive, but how can you confirm the price has stopped falling? Right now, if you were to look at this chart, it's clear the price is going down and NIO is in a long-term trend. The long-term trend is down, the medium-term trend is down, and also the short-term trend is down. So any way you look at it, the price is falling. So buying in now is very, very high risk. So when would be the right time to buy into NIO? It all depends on your investment strategy, whether you're looking short, medium or long term. Based on the chart data, it does appear that price would need to break this longer term trend line here and get above $6 to really show that it's starting some upward trajectory. Moving above $6 would clear all this price action here and would indicate that NIO is starting to move up. And I think based on the previous price action, getting above this peak here of 770 and breaking the trend line would indicate that NIO is starting to make a move up. So if you were to enter above the $6 mark, there is an upside potential to the 770 peak of around 30%, which is great. And if you kept holding and NIO continued to trend upwards, there is an upside potential of 150% up to that peak of around $15.50. So there is lots of upside with NIO, but right now the price is falling. So you have to be cautious. Right now, the NIO trend is down and investor sentiment is very negative, especially after the Q4 earnings report. NIO just didn't deliver the numbers that investors were expecting and posted heavy losses. Now, of course, we know they are investing heavily in infrastructure and launching multiple brands this year, including the ET9, NIO's Firefly, and also the Ondo L60. But the sales are improving, that's really positive, but they're not enough to drive the share price and convince investors to come back in. But that might change over 2025. I think this year is going to be a key year for NIO. If they can start to boost sales and start to reduce their losses, I think investor sentiment is going to shift and money will come pouring back in. So right now, if you're holding NIO, whether you keep holding it, that's up to you based on your strategy. But it is high risk to be buying in right now. I think it's probably best to wait a few months to see where price moves and if it can break that long-term trend line and get above $6. Thanks for watching.